Marathon Petroleum is up 79% over the past year. It's trading near its 52-week high. The analyst average target is 185. The stock is at 300. It reports earnings Tuesday. We ran the full year FSR going in. Here's what the data shows. Marathon Petroleum is the largest oil refiner in the United States. They don't drill, they buy crude and refine it into gasoline, diesel, and jet fuel. Their profitability depends on refining margins, the spread between what they pay for crude and what they sell refined products for. That margin has been favorable this year, driving the stock significantly higher. Ongoing share buybacks have also supported the price. 1 year of daily data, FSR Score 67%, Rolling FSR at 94%. Price started the year near 162, climbed steadily across above the yearly average of 209 around interval 134, and has continued higher to the current $300, near its 52-week high of 304. The only significant disruption was around 120 to 127, where Rolling FSR dropped to 87%. That was a brief pullback that resolved quickly before the stock resumed its climb. Here's the most unusual data point on this chart. The analyst average target is 185.97. The stock is trading at 300. The stock has outrun the entire analyst consensus by nearly 115. Either analysts haven't caught up with the fundamental story, or the market is pricing in something they haven't modeled yet. Earnings Tuesday will either validate that premium or challenge it. Full tool at predictability-api.com. Link is in the description. Thanks for stopping by. We'll catch you in the next one.